Chapter 5, Deductions for and from AGI. In 5.9, we discuss how to determine the charitable contributions deduction. To encourage individuals to be socially responsible, the IRS and the Internal Revenue Code allows a deduction for charitable contributions. To be deductible, the contribution must be cash or property. In addition, out-of-pocket expenses related to the qualified charitable activities are deductible as charitable contributions. For example, a taxpayer who drives 200 miles to take a church group to a meeting out of town would be allowed a charitable contribution of $28, 200 miles times the 14 cents per mile deduction. Value for the free use of your time or property is not deductible. Say I have a beach house that I only rent out for $1,000 a week, and I take 1 week out of my schedule to allow a church youth group to use the beach house for a retreat. That week's worth of income I might have had otherwise had I charged them $1,000, but I didn't. I cannot say that I have a $1,000 charitable contribution. To be deductible, the donation must be made to a qualified recipient. Page 532 has some characteristics of qualified recipients. A couple I want to point out to you. The first one I thought was very interesting. It says that the United States, a state or political subdivision thereof, is deductible if the donation is made exclusively for public purposes, etc. Example, you write a check to the U.S. government to pay down the federal debt. That would be a qualified contribution. You may also deduct to churches, synagogues, religious organizations, domestic organizations formed exclusively for charitable, religious, educational, scientific, or literary purposes, or for the prevention of cruelty to children or animals. There's a whole list there. Things that are not deductible are gifts to non-qualified recipients. Example, needy individuals, social clubs, labor unions, etc. Political parties. Contribution of time, service, proper use of property, or blood. Contributions where benefit is received from contribution, for example, tuition at a school, and wagering losses such as church bingo and raffle tickets. So if you donate money to the guy standing on the corner with the sign, you cannot use that as a charitable contribution because he is not a qualified recipient. You can also not deduct the amount that you spent on church bingo and didn't win anything. Those are not allowed deductions. There is an online search tool that you allow that helps you search for exempt organizations. Contributions of property. Gifts of household items and clothing are subject to requirements. They must be in good condition, and if they have minimal value, they may not be deducted. If you contribute property, the deduction is equal to the fair market value at the time of the donation. So, there is an exception though. If you donate property that would have resulted in ordinary income or short-term capital gain, then you have to deduct the fair market value less the amount of ordinary income or short-term capital gain you would have resulted. If the sale of the property would have produced a long-term capital gain, the deduction is equal to fair market value. However, fair market value is reduced by the potential of long-term capital gain if the donation is made to a organization that uses the property for a purpose unrelated to the organization's primary purpose. This is on page 533 in the book. I suggest that you read through this. There's a great example in there. It says, Gino donates a painting acquired 5 years ago that costs $4,000 to a museum for exhibition. The fair market value of the painting is $12,000. If he had sold the painting, the difference between the sales price of $12,000 and the cost of $4,000 would have resulted in a long-term capital gain because they held it for more than a year. So the deduction is $12,000, the fair market value. and you don't have to reduce it down because the museum's primary purpose is to display artwork. However, if the painting had been donated to a hospital, your deduction would only be $4,000. The $12,000 fair market value less the $8,000 long-term capital gain that you would have realized if you had sold it. So you got to make sure that you're asking yourself, are these donations going and are they going to be used in the organization's primary purpose? This is that example. If you donate appreciated long-term capital gain, such as stock, you deduct fair market value unless you make it outside of the primary purpose. B donates an antique couch to a nonprofit that provides housing items to battered women. The couch cost B $2,500 and is now worth $4,000. How much would B deduct for contributions? Would B's deduction change if she had donated the couch to an environmental organization? If she had sold the antique, her long-term capital gain would have been $1,500. Her $4,000 fair market value less her $2,500 cost. But since it was put to a use related to the organization's primary purposes, she can deduct the full $4,000. However, if she donated to an environmental organization, the purpose is unrelated. So she has to reduce her deduction by the amount of the long-term capital gain. So her deduction is $2,500. Generally, a taxpayer may not deduct total contributions in excess of 50% of the taxpayer's adjusted gross income. 50% organizations include churches, educational institutions, hospital medical research organizations. The TCJA increased the 50% limit to 60% for contributions of cash to public charities and 50% to other organizations. Contributions of other than cash remain at 50%. There are also certain 30% organizations that include private non-operating foundations, fraternal societies, and veterans organizations. This would mean that the contribution is subject to 30% of AGI. Another big change to the TCJA is the disallowance for the deduction of payment to a college or university in exchange for the right to purchase tickets at an athletic event. Under the previous law, you could deduct 80% of the cost. For example, when I was doing taxes, I had several clients who bought season tickets to NC State football games. So say they spent $1,000 on a donation to the NC State PAC alumni organization. By being a member of that organization, it allows them to buy season tickets. In the past, that $1,000 contribution was 80% deductible. Now it is not deductible at all. Taxpayers need to keep records, receipts, canceled checks, and other proof of charitable contributions. For gifts of property, such as clothes and household goods given to like the Salvation Army, anything over $500, you have to attach a special form. No deduction is allowed for contributions of $250 or more unless written substantiation from the organization. Clothing and household items must be in good condition or better to qualify for the deduction. If a charity knowingly provides false acknowledgement, they may be subject to a penalty. Quid pro quo contributions are partly a gift and partly consideration. Written disclosures must be given to donors stating the good faith estimate of goods or services received. So if you buy a $100 ticket to a charity dinner, then part of that would be deductible and part of that is considered the dinner cost. The organization normally tells you that of the $100 donation, $75 is a donation and $25 covers the cost of the goods received. Donation of vehicles. If you donate a vehicle then you have to get substantiation. The deduction for a donated vehicle is limited for the amount which the charity sells the vehicle. This also applies to boats and planes. The charitable organization will send the taxpayer a Form 1098-C to show the resale information. The taxpayer then has to show the 1098-C on their tax return. The taxpayer may claim an estimated value if the charity uses the donated auto rather than selling it or donates it to a needy individual. So if you donate a vehicle to, say, a women's shelter, and you could have sold that vehicle for $5,000, if the charity only sold it for $3,000, your deduction would be $3,000. If they continue to use it or they donate to a needy individual, then you may claim the estimated value. Example, during the year, Clem donates $1,260 to his synagogue's youth group, allows the youth group to use his lake cabin, valued at $500, drives 1,000 miles on behalf of the YMCA, and donates a vehicle valued at $950 to the battered women's shelter. The shelter then sells the auto for $750 and issues Clem a 1098-C. What is his charitable contribution deduction if his AGI is $33,200? He cannot take the value of the lake cabin, so his deduction is limited to $2,150. He can take the full $1,260 he donated in cash. He takes 1,000 miles at 14 cents a mile, and the $750 that the vehicle was sold for. That is his charitable contribution deduction. He may not take the donated cabin time, and he cannot take the full value of the vehicle, only the amount that the organization sold it for.